Hey, this is Julie at J Auto Trading Strategies, designing algos, repeatable signals with Bloodhound, and I will talk about that a little bit today to begin with before we get started looking at the chart because I want to refocus on what I'm looking for. I want to remind myself what it is I'm looking for in the market. Am I a swing trader that can put on contracts and let them run for a couple of days in the market? No, I'm not. I want to get in and out, get a few ticks, make an annual income, and go on with my life and not have to look at the markets all day long or look at my screen. So my goal as a day trader is I've narrowed it down is I just want a few ticks a day. And I've got to give a shout out to Eric Senft, who came over to Top Step Trader and talked to us and also runs the day trading room for Indicator Warehouse, for really opening my eyes and turning me on to this realization that as day traders, we only want really 2 5-tick trades a day, and that's it, and we can make a great living. If we add some position size to that, we're going to do fine. The key is at the bottom is not to strangle the trade and to give yourself a chance. That means you're going to go opposite of what your standard risk to reward structure has been that you've been taught. You've got to wait and give yourself a standard setup that you trade so you can wait for your signals to come around, because you're only going to be trading 1 or 2 repeatable signals that you're going to recognize patterns from the day trading time frame. In crude, you get 100 to 150 to 200 ticks a day. On a great day, it goes 300 to 500 ticks a day, but I've seen it, range that much. But typically 100 to 150 ticks a day in crude. Really the same thing in some of the other markets, NASDAQ, soybeans. Just depends on what your market state is. But you want to give yourself a chance to wait for that trade to come around and then take that trade without strangling yourself with getting stopped out and then having the market turn around and take away the 5 ticks from you. You don't want to get behind the 8 ball. You want to wait for the best trades, and once you're in the best trades, you want to take your profit at that point, because as a day trader, our job is just to get those 2 ticks. If you can sit here and do this on an automated basis and shut the computer down each day with 5 contracts and 5 ticks, you're going to do just fine. I mean, just having a simple algo doing that for you a day. I mean, who can't code an algo to get 5 ticks, right? So, getting back to the charts for today, you need to find a market action that's going to provide you context. That's why we look at the higher time frame to see which way our momentum and direction are moving. Crude has been in a range like it loves to do, and it looks like it's retracing back up to these high points, this support resistance area right here. So this looks like the place that it wants to come back up to. And here is our 3 dots, 4 dots. That means a volume point of control for the previous range. This is a weekly chart, is right up here. So this could be where this is retracing up to. Do you see that on the 240 minute? My stochastics are coming up. So on my direction guide template that's on the bottom, I see that price is coming up to this area that I have posted on my chart. So I'm going to be looking to trade long today, as long as this is still going up. That doesn't mean that the market's not going to come down, temporarily. But when you get a trend change between the down and the up, this is a good time to enter into the market looking for those 5 ticks on that trend change. And here's my new price action bar, the top one that I have coded to allow me to see when these trends change back up, and I can come into the market to try to get my 5 ticks. Now there's locations that are better to get those 5 ticks than others. Inside of value is not a great location because it is rotational. You have up and down swings. You can get whipsawed and chopped up and down inside of value, especially around the value areas. When you're trading outside value, like here, that is an excellent chart location to try to get your 5 ticks a day. Price color change, we're directionally going up. We have a trend change right here, color change in our bands. It's going back up. This is an excellent time to get back in the market. Here's your money shot right here on this chart. Identify what your repeatable setup looks like and get your 5 ticks each day. And what I recommend is, once you realize what your day trading game is, you can relax, not chase a bunch of signals. You just find those 2 trades that you can make 5 ticks on, and that's it. So if you start out doing this with 1 contract, you're going to make $24,000 a year. Now that's a great part-time job. So you could just sit there 10 minutes after the open and get 5 or 10 ticks, close it up, and go home. If you did that for a week and you're getting them consistently each day, add a contract to that. So instead of 1 contract, you're going to do 2 contracts. 2 contracts, you're going to get $48,000 a year. Do the same thing after you've realized that you can relax. It's the same thing that you're doing. You're looking for that same trade each day, and you're able to do it, and you're relaxed. Add another contract. That's $72,000 a year. 5 contracts, $120,000 a year, folks. A 6-figure annual salary on taking just 2 5-tick trades a day. Okay? So you want to be ready when the markets are trading in your direction guide. Open to close is one way to approach it that I've got on my website. I've got a trend bar, price action bar, that shows me when those trend changes are. And as long as I'm going back in the direction of my direction guide, I can loosen my stop up, park it behind the pivot, wait for a pivot on that trend change, park it behind that pivot, and then just wait for my 5 ticks. Okay? Ideally, I'm going to be looking at a market where price is moving outside of value in my direction. This is the golden trade. We don't always get outside value. Sometimes the day is all inside value. So try to find a market. Take a selection of markets so that you will have a chance to find a market that's trending in one direction or the other with your weekly, daily 60-15. Have that on your trend bar so that you can flip back and forth between these markets. And if one market is not, if it's all inside value and it's just whipping around, acting crazy like it can be on certain days, like it has been this past week, with that triple witching option expiration. I mean, who wants to trade that? You just get chopped up. Look at this. Look at all of these trend changes. You're just going to get chopped up. You're going to get whipped out, stopped out, eaten up. So when you see a market state like this, sit on your hands. It doesn't matter that the trend or the direction is all south, because you're just going to get whipped up and down like a chop-o-matic in a blender, like a frog in a blender. It's not good. Find a market state that is working like this, where you've got your direction, where you can wait for this trend change and then get in on this price action outside value, wait for your 5 or 10 ticks, and go home. Go on with your life. Go to the mall. Go golfing. Go do something else. But certainly don't sit at your computer all day, unless you just want to leave a runner in the market and trail it up with an ATM strategy, and I can talk to you about doing that too. That's extras. That's what I'm going to describe as keeping a bank. And keeping a bank is, after you get your 5 or 10 ticks a day and you get your 48,000 or your 72 or your 120,000 a year, those runners are going to be your bank, so that they will offset any losing trades and provide extra income over and above. Manna from heaven. So learn to read price action, though, with your charts. Find out where price is likely to go. You've got direction getting there. And then look at your 30-minute chart too. I'll pull back the old 30-minute chart and realize if momentum is down and I'm in a retracement, it's going to be choppy getting up to that level, especially inside value. It's just going to chop up and down. So realize the best markets to trade in. Try to find those markets outside value when we're going outside value, running in a nice run up, versus sitting inside value, chopping up and down to get there. So work with your market structure. Here is a beautiful trade setup right here. We were coming down. And then we had a pullback that did not even signal a color change. You got your wick and you got your close. The sell would be right below the little pullback candle, and you get your 5 ticks and you get out, or even hold it for a runner 10 ticks. Learn your setups. Learn what you're looking for from the market and only focus on those trades. I am a day trader. I'm Julie. Have a great week. Thank you so much.